Good morning, everyone, and a warm welcome to our post-earnings conference call for the quarter and year ended March 31st, 2018. I have with me on call Mr. Vijay Kumar, our CFO, and Stellar IR Advisors, our Investor Relations Advisor. We hope that you have all received our Q4 and FY18 investor presentation and gone through the same. We have also updated it on our website for your reference. We understand that the recent happenings in the aquaculture industry globally and more so in India has led to a bit of worry in the minds of many investors and analysts with regard to its consequences on industry players like ourselves. Therefore, we would be happy to take this opportunity to update you all on certain on-ground trends of the industry and also address any queries that you may have on the same. We will begin the call by sharing key updates on our business first, followed by an update on the industry, and then a summary of our operational and financial performance for the financial year FY18, post which we could open the floor for Q&A. On business updates, first and foremost on our new project, the construction works of the processing area and other support facilities is on track, and we expect it to be ready by the end of Q2 FY19. So the commissioning is likely to be completed by Q3 to be precise. The cold storage facility is nearing completion. Also, some of the imported machinery have been shipped and are being dispatched to the processing plant site location, the new processing plant location. As for the capex incurred of the total planned outlay of almost 90 crores, 27.3 crores has been incurred till the end of March 2018, and further some part of the proceeds are in the machinery which is in the transit. On our existing business front, this year has been very good for the company, wherein we achieved a new milestone of crossing the 1,000 crore mark in our total income. Our profitability too was bolstered this year by the culmination of our backward integration efforts like setting up hatcheries and enhancing in-house farming operations. We added one new hatchery last year and also increased our farming by almost 600 acres in FY18 to 1,800 acres currently. Further, as most of you would be aware, that we are a 100% export-oriented business and have major share of revenues coming from the USA. As a conscious effort towards favorably diversifying our revenue mix, we were successful in increasing our business from European Union last year. The share of EU market in the overall revenue mix increased from 18% in FY17 to 24% in FY18, despite the strict quality norms and the checks on banned substances like antibiotics placed by EU on Indian processing companies. We aim to better the mix further in the coming years with proper systems and checks in place. Going ahead, our upcoming facility will enable us to add new products like ready-to-eat category, which will cater the demand for such products in our existing as well as in the new markets that we plan to foray into. We look forward to and would strive for reaching a revenue mark of rupees 1,400 crores in the next 2 years, subject to processed shrimp price stability at the current levels. Lastly, as a way of rewarding our shareholders for the trust they reposed in us and for the good year that we have had, the board has recommended a dividend of 20% of the face value, that is rupees 2 per equity share, as compared to 10% last year. That is largely on the business updates from us. Now coming to industry updates, as you know, there are a couple of variables that are key in our business. The first is the demand-supply scenario globally and the resultant pricing of finished products, which is shrimp prices. The second is the primary producers' sustainability matters. On the demand-supply scenario, the last financial year started with high demand. However, towards the second half, we saw a tapering of demand due to the extended winter. Parallelly, the supply of shrimps increased due to the increased production by India and on-streaming of supply from some Southeast Asian countries. This resulted in a correction in prices of shrimp, which started in the second half year of FY18. As of now, shrimp prices on an average might have corrected in the range of 15 to 20% year on year. Now, while this may have an impact on realizations and in turn revenues, we believe that such price corrections could lead to increased consumption of shrimp and thereby boost volumes sold. We are already starting to witness a gradual pickup in the consumption in the past 4 weeks and are foreseeing a strong pickup again from Q2 of FY19 onwards. As far as the profitability is concerned, our margins, as also displayed in Q4 of FY18, does not get impacted hugely as price corrections in shrimp are normally passed on to the primary production level. Now on the primary producer sustainability, as you must have read, farmers have seen a fall in farm gate prices as a result of the aforementioned demand-supply scenario. While this may be true, but it hasn't translated into farmers moving out of the business. In fact, some states have decided to support the farmer community by supplying electricity at a unit rate of ₹2. Furthermore, we believe there is a significant headroom for the cost rationalization at the farmer's end, which once implemented would arrest the margin erosion for them. Now, our CFO, Mr. Vijay Kumar, will explain the financial performance for the year.
Hello. Yes. Good morning, everyone. Now I will present the financial performance of our company for the financial year 2017-18. Our total income, including net revenue and other operating income for the full year financial year 2017-18 was rupees 1018.5 crores versus rupees 709.30 crores, a growth of 43.6% on year-to-year basis. This significant increase in income was resultant from higher volume, while average realization remained flat between financial 17 and financial year 18. In the full year, financial year 18, we sold a total of 14,146 metric tons of finished goods, processed shrimp, as compared to 9,897 metric tons of sales in full year FY17. At the EBITDA level, we reported rupees 129.9 crores for the full year FY18 versus rupees 55.8 crores in FY17, a growth of 136.5% on year-to-year basis. EBITDA margin stood at 12.8% in FY18 versus 7.7% last year. Profit after tax stood at rupees 79.1 crores for FY18 as compared to rupees 25.1 crores in FY17, a growth of 214.8% on year-to-year basis. The PAT margin improved to 7.8% from 3.4% in FY17. The profit margin have expanded on account of operational leverage as we fully utilized our capacities and increasing the share of high-margin value-added products and our backward integration efforts. Going forward, we expect demand to remain firm and our capacity to continue to be optimally utilized. We continually strive to reduce our costs through backward integration and enhance our product offering to customers via value addition, thereby improving profitability of the business. That is all from our side. I would now request the moderator to open the call for question and answers. Thank you.
Sure, thank you very much. We will now begin the question and answer session. Participants who wish to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Also, before we begin, we'd like to inform participants, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. We will wait for a moment while the question queue assembles. We take the first question from the line of Anirudh Joshi from ICICI Securities. Please go ahead.
Yeah, hello sir. Just wanted to understand, where do you see the shrimp prices moving in maybe next 1 year? So we have been hearing the shrimp prices have collapsed, and so where do you see the ending by end of FY19? Hello. Hello.
We seem to have lost the line for Mr. Subramanian Chaudhary. We are reconnecting. Please stay connected. Please stay connected while we reconnect Mr. Subramanian Chaudhary. Participants, thank you for patiently holding your lines. We have the line for Mr. Subramanian Chaudhary reconnected. Over to you, sir.
Yeah, Mr. Anirudh? Hello?
Hello, yeah, sir, please go ahead.
Yeah, sorry, could you repeat the question? I'm sorry for the interruption. The call got disconnected. It got dropped out. Could you repeat your question, please?
Yeah, so the question is regarding the shrimp prices. So where do you see the shrimp prices settling by end of this year, FY19? And what is the outlook on shrimp prices?
So the shrimp prices have pretty much bottomed out. As such, there's the correct. Of course, you have mentioned, I think, in your question that they have collapsed. Collapse is not the real, actual right word to be precise, but it is more of a correction which had happened and which was imminent to happen based on the supply and demand. As you know, price increases also happened due to the supply and demand. So these corrections were imminent as the supply was increasing and also based on the demand which was there in the later part of last year. Now, as of now, the shrimp prices have pretty much, the correction has pretty much completed and it has stabilized now. And in fact, we are looking forward for the demand to be increasing because at these levels, the end consumers are also looking forward to consume more shrimp because they are finding a better value in the products.
Okay. Okay, sir. Thank you.
Thank you. The next question is from the line of Rehan from Nirmal Bang. Please go ahead.
Sir, Jehan here. Sir, in the presentation you have given the realizations for this year as well as last year. With that perspective, so for FY18 the realizations given is 720 rupees per kg. So currently what is the rate? So over the past 1 month, what would have been the approximate rate?
The correction has gone, it has 680, approximately around 680 to be precise. You also need to understand that the realization is an average of various products and various sizes. So, in that same manner, if we look at it, currently it is around 680. Approximately 680, 685. That's the range you take. Yeah. That's the correction.
Was it year on year, let's say in H1 FY18, this number was 718 rupees.
Correct.
Okay. And and accordingly, has there been a fall in the procurement cost as well, or that is where it was?
The procurement cost also has been, that's why as the previous question was there, the procurement cost also has corrected accordingly. As such, as we had mentioned in our opening remarks, the industry in India is pretty much dependent on the export markets. So when the export market, based on the export market realizations only, the farm gate prices are dependent. And naturally, when there is a correction overseas, on the higher side, naturally, when the same corrections happen here. If there is a price rise overseas, naturally the price rise gets reflected at the farm gate level.
Right. So, sir, if we were to look at it this way, that our selling price per kg, and if we subtract the procurement cost, so the margin that we get, will it be stable like what it was for FY18, or that margin has also come down slightly?
The margins will not come down. They will be stable. The reason is, as I had been reaffirming, any reduction, any changes in the realizations, including the fluctuations in the foreign currency and overseas selling prices, will have its relative impact at the costing of the raw material. So naturally, the margins are not meant to be impacted unless there is an adverse change in the cost. But when you have the entire aquaculture sector dependent on export markets, it is in tandem to how the export markets are driving.
Right, sir. Right. Got it. Okay, and one more thing is on this seafood import monitoring program, which the US has included shrimps in that program now.
Yes.
So, what will be the implication for our company? Have we been tracking it already, or we will be putting things in place?
Yes. The first thing is seafood import monitoring program is a new system which has been developed by the US government to ensure traceability of the products being produced at foreign locations, at the origin. So in the case of USA, they are primarily looking at traceability. What we need to understand is that the traceability is already in place with all the processing facilities within the country. And especially if we talk about our company, that has already been there. And we have the details of the primary source, that is the harvesting location, the farm from which the produce has been harvested. And the product is being, the details are available. It is already maintained. It is just that the United States government has never asked for those details, which they are going to implement from Jan 1st, 2019, which is not at all an issue for the companies, the seafood processing companies in India, to actually affect it. Because those systems were already in place for the requirements as per the Indian government regulations and the EU norms for quite many years. So the seafood import monitoring program is not at all an issue for the industry in India, to be precise.
Thank you. The next question is from Rishabh from Citibank. Please go ahead. Rishabh from Citibank, you may go ahead with the question. Rishabh from Citibank, your line is on talk mode. You may go ahead with the question. There seems to be no response from Rishabh. We'll move to the next question. Next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Hey, good morning, sir.
Good morning.
Congratulations on a good set of numbers. So my question is to Mr. Chaudhary. So previously, till FY17, our industry used to enjoy something like 6 to 8% kind of EBITDA margins. In FY18, we did around 13%. So what were structural things into play that benefit us and the entire industry in general? Because your competitors are also clocking double-digit margins.
Right. Sir, with regard to the growth in the EBITDA margins, I need to inform you that there are different factors which affect the increase of in the EBITDA margins of the company. The first and foremost, which I have given certain detail in the opening remarks, is about the increase in the farming area, in-house farming area, by almost 600 acres in the last financial year, which also added significantly to the in-house production. Added to that, for the full year of last year, if you look at it, we have added an additional pre-processing facility, which is not only enhancing the volume of the company, the volume sales of the company, but it is also enabling us to produce higher value products in the ready-to-cook category, which is the present category in which the company is only producing. So we were able to produce higher value products also. Apart from this, there was also a increase in pricing from the overseas markets, whereas the cost of the raw material also to a certain extent was lower. So there are multiple factors for our company as such, even though I will not be able to comment on other companies or on their factors or their variables, how they work for them. But in our case, these are the major reasons which help the company to maintain these levels of these higher EBITDA levels. And we are pretty confident with the integration on the backward, which is continuing, and also the steps being taken for the forward integration in producing higher value products. We are confident that we'll be maintaining those levels of EBITDA.
Right. So our capex is due to commissioning at the end of Q2, right, this financial year?
Yeah, we are completing that. So we are looking at trial production in the third quarter, and to be precise, it will be fully utilized, available for full production as such for the capex with all the systems and the teams in place. It should be available more in the third and fourth quarter. And for FY20, the facility is completely available for the full year. Exactly.
That's right. Yeah. So what is the volume guidance for FY19? So what kind of volumes do we foresee to clock this year?
In the volume front, we are actually looking at a 20 to 25% growth in the volume front as such, because that is only not on. Of course, the added point is once the new facility comes, the increase in volume will not only be in the ready to cook category but also ready to eat. So there will be the volume growth aided by the additional value-added products will also affect the financials there accordingly.
Okay, so we should be doing something like 17 to 18,000 metric tons this year, right?
Yes, approximately.
Okay. Okay. And so what about FY20? What kind of volumes do you foresee there?
FY20, we should be another 25%. That's what approximately. Yeah, 30 to 25%. So in the volume growth.
Okay. So then, are we not down? So we should be able to clock something like 1,400 crores of turnover this year itself, right? You mentioned it to be achieved over 2-year time horizon, right?
But you also need to understand that there have been price corrections, right? At the same time. Hello. Yeah, I said there are at the same time there have been price corrections also. So, which you are also noticing. So, as we planned, I would rather, we are giving what is, we don't want to commit high and perform low, rather commit low and perform high. If that's, I put it in the right word. Yeah.
Okay. And so lastly, what will be the, of the lease capacity of 6,000 odd tons? So we will stop producing from that, or it will still continue?
The idea of the company is to phase out of those operations as we bring in our new facility into complete usage. So basically, the decision of that will be done for the year FY20. As this is happening in phases, it is not something which will happen in a short span of time, because you need to get the new facility also under control and have the respective teams, and also have the required approvals by not only by the foreign governments but also the respective customers to audit those facilities, audit the facility also.
Thank you. The next question is from G. Vivek from GS Investments. Please go ahead.
Sir, good morning. And just wanted to ask about the problem which is encompassing our industry. Is it due to the overproduction, due to large number of farmers in India moving into shrimp farming? And number two, about the supply, similar sort of supply increasing in Indonesia, Ecuador, Vietnam, and that has led to price crashing worldwide. And how long this situation is expected to remain in this condition?
Sir, with regard to the situation of the supply, which you have mentioned, whether it is in India or number of farmers or quite a large number of people moving into aquaculture farming in India, as well as the production in other countries of Southeast Asia, the product supply, yes, definitely has increased. Now, if these price corrections, which you are referring to, you are saying price crash, actually it's a correction. Because of these price corrections, we should see higher consumption happening. Now, in fact, the product consumption has picked up, and it is continuing to pick up through the year. That's what we foresee based on our requirements from our customers and the demands which are being raised. Because once the prices have corrected, in fact, the end consumers are looking forward to more shrimp than what they were usually consuming in the past. So naturally, when you would want the product to be consumed at a higher rate of volume, the price corrections are imminent. And once the supply is there, the focus of our company primarily is to promote more shrimp consumption. Of course, since we are entirely into the export markets, we're working together, coordinating with our customers who are the distributors and located in the European Union, and to promote more of shrimp volume to sales. That is really, in fact, the price corrections are helping the shrimp volume growth, the sales growth.
So basically, whatever capacity India and our company is going to produce can be easily absorbed in US and in China. Any breakthrough in Japan?
So the capacity of India will be absorbed by all the various importing countries, markets, whether it is USA, Europe, which is of course pertaining to the major markets where our company is focused on, or let us talk about China or other parts of Southeast Asia, whether it is Vietnam, Thailand, and even Japan. Added to that, there is South Korea, Russia, and East Europe, which are also picking up more shrimp products from India nowadays. And the government is already negotiating to restart the exports of shrimp to both Australia and Saudi Arabia. So overall, when we look at it, the global markets are, whether by the efforts of the government or by the efforts of the individual companies, the global markets are opening up. And with this price correction in general, we are looking ahead for higher consumption and thereby the demand picking up. So as such, there is more demand. We only look forward for higher demand in the corrected price scenario, and that is really supporting us. So yes, like you said, all the markets are opening up. It is good. Even the government is putting up its efforts to look at Australia and Saudi Arabia. So that is also a positive feedback. South Korea is also added up in buying regularly from India at this point.
Nice. So basically, coming to the present down cycle in shrimp, so farmers are the biggest loser. But whereas for the companies like us, we are still able to maintain our margin. And if we are into some long-term contract already entered into certain customers in US and Europe, that means can it be a big bonanza also sort of for us companies like us, wherein we have entered at a higher price few months back or 1 year back?
So yes, for those contracts which are entered few months back, I wouldn't use the word 1 year, but at least few months back, definitely it is helping the companies like us to have some advantages. But at the same time, we also need to look at the sustainability of the primary production. And that is the reason we are also working in tandem with our primary producers so that they also be sustainable. And as I mentioned in my opening remarks, there are also cost rationalizations which are happening at their level, thereby they also don't lose, and they make decent amount of margins in their production cycle with efficient production outputs and cost reduction. So that way, whether it is the primary producer or the processor exporter and also the importer, all of them would be working on making decent margins, reasonable margins, and at the same time having a good volume sales. Yeah.
Thank you. The next question is from Srinath Sridhar from ICICI Securities. Please go ahead.
Good morning, sir. The first question is, you're going to come into ready-to-eat category of 5,000 tons. So what is the additional realizations from that?
We are approximately looking at around $2 to $4 per kg additional realization on those products.
Okay, and in each year, how much would you be targeting to sell? How will you ramp up this?
We are actually looking forward to utilize the maximum capacity of the 5,000 metric tons in FY20 in the first year. I mean, when the facility is fully available, we are anyway planning to utilize 100%. I mean, the maximum optimum level of what we consider it around 75-80%. We are anyway going to utilize it to the maximum capacity. And we are also, based on the demand and the queries of business from our customers, we are also looking at the possibilities of adding additional lines in the next year. So once the project is up and running, we'll be making a decision on that as how the order book is for that ready-to-eat products.
In this $2 to $4, how much will you be able to retain? So I'm trying to understand the margin.
See, at the same time, even though the cost is, the sale price will be approximately increasing by $2 to $4, there's also a costing which will be there. Also, there are the yield loss of additional 20%, which will be there, and additional costing which is involved. So
how much is the yield loss? Sorry, I didn't get that.
Approximately around 20%.
20%. Okay.
Yeah, depends on the sizing. Yeah.
Okay. And so what is the retention out of this $2 to $4?
Overall, we look at it around $1 to $1.5 approximately. Overall retention. So that is dependent on subject to the different sizes and the products. So I just gave you a range of 2 to 4.
Yeah, ballpark should be fine.
Yeah.
Right. Sir, what is the guidance on the tax rate? This year it reduced to 30% from 33% last year.
It's based on the India. I think that it's not, they could have changed based on the India's presentation, but as such, there is no reduction in the tax rate for the company for FY18. For FY19 and FY20, based on the new facility which is opened, there are some tax benefits which will be, the details of which will be provided once the operations are fully up and running.
Okay. And, sir, this other income, why do you include the other income as part of your revenue to calculate realizations? Is it in sync with your revenues, or is it?
The other income is foreign exchange difference. To be precise, it is actually but because of the accounting standards, we cannot show it as it's not that whatever you are seeing in the other income is the foreign exchange difference between the realization benefits which the company has due to the fluctuation of the foreign exchange. But because of the accounting standards, we are showing it as other income.
Thank you. Next question is from Aman Vij from Astute Investment Management. Please go ahead.
Good morning, sir. Couple of questions.
Yes.
Aman, I'm sorry to interrupt. Your voice is very low. If you could speak a little louder.
Yeah, sure. So the first question is on the realization and sustainable margin in the three categories of shrimp: frozen versus ready to eat versus ready to cook. Assuming the today's current price, if you can throw some light, maybe a range also, if not exact.
Sorry, can you repeat? I'm sorry. Could you repeat the question once, please?
Sure. So I was asking you the realization as well as sustainable margin, assuming today's prices across the three categories, which is normal frozen versus ready to eat versus ready to cook?
I think there's some confusion with regard to how you classify the products. To be precise, ready to eat is nothing, ready to cook is nothing but frozen. All products are frozen anyway. What I meant is what vanilla. Currently what.
Yeah.
Sorry,
you go ahead, sir.
Yeah, so currently whatever the company is producing is ready to cook, which is frozen, but it is in the raw category. That was the whole point. But within the raw category, we do have different kinds of products which are some are going into the commodity markets where you make low margins or rather very less margins, and some products where you make higher margins. The company's focus has always been in trying to enhance more of the higher value or higher margin making or higher value realization products which are there even in the ready to cook category. So that is how these pre-processing facilities and all have been they have been aiding the company. So as such, there are only two categories which I just answered in the previous to the previous question, where I had mentioned the difference between ready to cook and ready to eat, dependent on the sizes and also the products which are there. It will be approximately around $2 to $4, but that again depends on the price corrections. So when the price corrections will be there will be naturally the difference also will be reduced accordingly. It's not, as I also explained that there is additional costing involved along with yield losses which are there. So those will also have an impact on the margins, the additional margins which are there between the ready to eat and the ready to cook. Even though as also to state to you, the ready to cook, as I mentioned earlier, it involves multiple products of multiple sizes. Similarly, in the ready to eat also, it is multiple sizes and multiple products. Depends on what category of product and what sizes are you producing for you to get higher realization or higher margin. I hope you understood what I'm saying.
Thank you. The next question is from the line of Dipesh Kashyap from Equirus Securities. Please go ahead.
Yeah, hi sir, good morning. Sir, few bookkeeping questions first. So what was the volume sales in 4Q FY18, please?
Volumes in?
Yeah, volume in that 4Q FY18. In the last quarter, how much volumes you actually sold?
So, 3,006 metric tons in the last
3,000?
Yeah.
Okay. And so what was the actual export revenues if you exclude the incentives from Q4 number?
Actual export revenue numbers was 1 minute. That's 185. You said actual export numbers, right? 185.
Yes, excluding the incentives.
Yeah, 185. Yeah.
185 crores, okay. And sir, there was some confusion regarding the incentives in your press release. So I just wanted to be sure. So you said 12.7 crores were recognized in FY18 for the prior periods, right? Out of which 7 crores you recognized in 3Q and remaining 5 to 6 crores in 4Q. Is that understanding correct?
Yes, that is correct.
Okay, great. And sir, can you help me with the amount you paid to Royal Marine in FY18?
Approximately around 18 crores, approximately.
And that number should be similar in FY19 as well?
It will continue in fact, it may go up a little bit as we enhance our production and volumes for FY19.
Okay. And so last question on the farmer economic side. So so I just want to understand the main problem that I am hearing is that the farmers are paying very high lease rentals due to which the profitability has decreased. So can you help me, since you own farms, how much lease rentals the farmers are paying in Nellore right now per acre of land?
Sir, in Nellore, I'm not really sure. See, the farm lease rentals are totally dependent on the facilities and the infrastructure of that farm, the location of the farm, And also it is the decision making of the individual farmers based on what they think is apt for the realization of the products which they produce. So, of course, overall, on an average, the industry average was between 30 to 50,000, 60,000 was the average. But of course, yes, there were cases where some of the farmers went high and have been paying higher lease rentals because of the it's more got to do more with the higher realizations they were having for the produce what they were producing, and that was the reason they could have got tempted to give higher lease rentals, which, as I mentioned in my opening remarks, a lot of cost rationalization is also in the process, and it has happened, and it would get completed. We expect it to be completed by the end of this calendar year, to be precise, where the farmers also will be changing their decisions or accordingly making the right decisions based on the market scenario, at what lease rates they can give.
Right. So this 30 to 50,000 number that you gave, that is per acre, right? And per month or per year?
Yes. No, it's per year. Per
year. Okay. So per year, like they do 2 crops in this, right?
That is where it is subjective. Some areas they do 2 crops, some areas they do only 1 crop in the country. So as you know, the aquaculture is widely spread out in the country. Different areas, based on their climatic conditions and their salinity parameters, they do conduct the crop accordingly. Yes, there are 2 crops in majority of the areas, but there are quite a number of areas where they do only 1 crop, but it is extended for 6 months.
Yeah. Okay, understood, sir. Thank you, sir, and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Shrikant PVS from Spark Fund Advisors. Please go ahead.
Hi, sir. Thank you for taking my questions. I have a couple of questions. What is the operating cash flow for FY18?
Yeah, 1 minute. I'll be providing that to you in a short while. I'll provide you that details.
Okay, sir. What is the capex guidance for FY19 and 20?
FY19, as the major is, of course, the new processing plant, which is there to the extent of 90 crores. And added to it, an additional 10 crores could be looked at. Another 10 to 12 crores could be looked at for additional pre-processing facility and as well as new hatchery construction, which is the 4th hatchery, which is in process right now. So all put together, we look at around 100 to 105 crores as the total capex for FY19. And FY20, dependent on once these facilities come in, we will be taking the decision of the capex requirements of FY20 more towards the end of this year, as once the present capex envisaged is completed.
Sir, this 90 is that does it include that 27, 28 what you've spent already?
Yes, it includes. Correct.
Okay. And sir, yeah.
We'll get back to you on the cash flows in a bit. Yeah. Okay.
And what is the outlook on working capital cycle?
The working capital cycle has been maintaining quite low, and in fact, we have the working capital cycle in the total has been brought down to 52 days as in the whole, from 60 to 52 days. That is because of also our realizations have been much earlier, and we are working on the terms with our customers to have earlier realizations, payments upon shipments. So basically, we are reducing our debtor cycle, to be precise.
So do you see any savings further this year?
Naturally, the savings will be on the cost of funding from the banks anyway, which you can already see between the difference between the FY17 and FY18. We will continue to add more savings to that in FY19, stabilizing with our total working capital cycle at around 50 days, 45 to 50 days approximately. Yeah.
And sir, one more question. This farm prices for farmers. So what would be the price, say, for current price versus last quarter, same as in for the last year same quarter?
Sir, there are the prices of farmers or even prices of exports, of course, as such, I'll give you on an average, if we look at it, earlier we were buying at around 350 rupees on an average, approximately. Now that will be coming down to under 300 rupees, around 290 to 300 rupees approximately. So the farmers' prices are, because there are multiple sizes involved, it depends on what sizes they harvest. So in the first quarter of current financial year, it is more of small sizes which are being harvested. From the second and third quarter, the farmers are looking forward to harvest more of medium and large sizes. So naturally, accordingly, the prices also will be, they will be realizing based on that. But just to give you on a market perspective, last quarter, the pricing was around 300 plus or 330 rupees odd, 330, 340. Now currently it is at 280 to 90.
Thank you. Next question is from Harsh Saraswat from Girik Capital. Please go ahead.
Hello. Hi, sir. Congratulations on great FY18.
Thank you.
Hi. Sir, when I go through the presentation, I see there is Europe has contributed to 17% this year from 10%. What have been the key reasons for this with all the European headwinds which we have been hearing?
Yeah, Mr. Harsh, if you see, of course, in our presentation, we have been showing United Kingdom out of EU, but actually it is combined. The UK is part of EU as on date until the Brexit is completely completed. So, yes, because both UK as well as European markets, they are governed by the same health regulations as on date. And their testing mechanisms, their testing protocols of having 50% testing on Indian shrimp consignments pretty much are, they are continuing to do that, which they have been doing for the past one and a half year. And we are, in order to ensure that we meet their requirements, we are taking care of by testing the products prior to harvest and also prior to processing, thereby ensuring that we don't pack, process or export any antibiotic product, antibiotic positive product, and thereby we have been looking forward to increase our business in EU irrespective of the conditions stipulated by the EU health authorities. Naturally, when we need to do more business with such markets, we need to ensure that we meet their standards by having the required systems and protocols in place within our own sourcing and processing systems.
Europe is a more value-accretive market compared to US?
For us, yes, correct. For us, it is more of a value.
And then going forward, you see EU volumes moving up only?
We are looking forward to increase our EU volumes even in the current financial year. And we are looking forward to, even in the enhanced volumes, we look forward for EU to play a major role, EU including the United Kingdom to play a major role in our business.
Thank you. Next question is from Puneet Mittal from Global Core Capital. Please go ahead.
Hi. Thanks for the opportunity. You just mentioned 330, 340 rupees last year. What count shrimps were you talking about?
I was talking about 40 count.
30
on
count.
An average. 40 count. 40 count,
okay. The next question, so the question related to that is in your vast experience that you have in this industry, what is the lowest price that you encountered for farm gate prices?
The 40 count was at, I think, around 180 or 170 rupees way back in the year 2012. If that's the 170. At that time, the 30 count was 200, so 40 count was around 170 or something. But that time, again, the supply was different, the consumption was different, so many markets were not available. So there are various factors. In fact, the demand has been more aggressive than the supply in the last 5 years. Now the supply has been sufficiently made available, whether it is from India or other Southeast Asian countries, to take care of such a demand. And now when the supply is also increasing, say more than the demand, the price corrections are imminent, which is the reason why these price corrections have happened. And it is more of a booster for increase in the volume or increase of the preference of the end consumers to shift from other proteins to more favorable products of shrimp products. As you know, the shrimp is the most preferred seafood product in the United States, for example, which is one of the major consuming markets. So that way, we are looking forward for a good positive outcome of this price correction, because there's a lot of demand which is picking up. Consumption is also demand as it's aided by the consumption. So not just based on the imports or distribution, but also consumption. That's the main key part. Consumption has to improve, and consumption is increasing as we speak today.
Okay, that's great. So the farmers at this stage, are they making losses or are they just breaking even, or what's the status of the farmers at this stage with these prices?
So depending on their costing and outputs, their production yields out of their farms, they will be breaking even. At the same time, they will also be making some very low margins. But of course, there are some people who might be losing. As I said, it is all dependent on the costing. Like if you see one of the previous questions asking about the lease rentals, if the lease rentals are significantly higher, and if the costing of inputs for them has been significantly higher, and if their output was significantly lower, naturally their cost of production, end products, their final products cost of production will be high. So now, because of these price corrections, of course, even though the governments are aiding, the industry is will be supporting, the farmers are also looking at cost rationalization. They are looking at, for example, they have been buying earlier seed at 70-80 paise. Now they are looking to buy at 20 paise, 15-20 paise. That way, thereby, the necessary steps by the primary producers are being taken to rationalize their costs. Thereby, they can make a decent margins. That's what we are looking forward to. But at the same time, it is subject to various farmers located at various locations and how their costing is. So I will not be able to generalize as such. But your question was, of course, quite general, asking whether they are going to break even or they are going to make money or they are going to lose money. It is all dependent on the individual location. So there is definitely a cost rationalization which was required, and now that is happening as we speak.
Thank you. Next question is from Aditya Yadav from Transient Capital. Please go ahead.
Yeah, good morning to the management team. Thank you for the opportunity. Hello.
Go ahead. Good morning.
Yeah, sir, I just wanted to understand a bit on the scaling of the ready-to-cook and ready-to-eat segment. Sir, how much of this involves manual labor work? Because what roughly I know is this involves a lot of training for labor to cut the shrimp and to prepare it for the ready-to-eat and ready-to-cook products. So if you can give an idea on that, how will the scaling go for this?
The labor which is required, whether it is for ready-to-eat or ready-to-cook, labor is the same. But of course, there is a lot of training involved which will be required, which will be provided, which is already provided. In fact, the company's additional pre-processing facilities will be taking care of the requirement of making the product available for this ready-to-eat also. However, there are some additional skills which are required in the ready-to-eat dependent on what products they are. If it is cooked product, it is more done based on the machinery, the cooking facility, cooking lines which are available. If it is breaded product, you also require additional manpower and a lot of skill development which is there, for which, of course, we are already being guided and looking forward to the support of our customers who are currently buying those products from countries like China and Thailand, who are willing to support us because of the presence of the raw material, the strength of our company as well as the countries that the raw material is being produced in mass in our country. So naturally, the skill development of the workers will be done by the company, and that will be enabling us to produce more of these ready-to-eat products. Depends on what kind of products they are, as I mentioned.
Okay. And sir, my second question is, I wanted to get your thoughts on so in the past 4-5 years, what has happened was India was able to actually capture a lot of the incremental market growth, what happened in the world demand. So going forward, as the production has stabilized in other 3-4 large producers also, so I mean, will we be able to capture same kind of incremental growth in the market, or will be more distributed across the various top producing nations? What are your thoughts on this, sir?
Yeah, I am not sure about other countries stabilizing their lost supply as such. Other nations stabilizing or coming back into supplying to the full fold of where they were in the past. But as far as India is concerned, India as a country, supplying nation of shrimp products, has established itself as a quality producer, consistently producing throughout the year. In fact, foreign markets, whether it is they are located in North America or even in Europe or East Europe or Africa or other parts of Asia, including Japan, South Korea, China. China is a major factor for Indian products in the last 3 years, which were one of the main reasons why Southeast Asia is absorbing more than 30% of India's shrimp products, and primarily because of China, which is, of course, and also Vietnam, Thailand, all put together. So these markets are already encouraging India's supply to grow. They are the aiding factors for India's supply to grow, and they are absorbing the products. And going forward also, because of these price corrections and the shrimp being available at a much reasonable level, and it being a very delicacy for quite a significant population globally, where they relish the shrimp products, we are really seeing even though it seems to be a negative sign for the industry, but in a medium term, it is a very positive sign because it encourages consumption of the products. That is the major point. Naturally, when you want to have higher consumption of the products, you definitely have to give it at a reasonable pricing. So that is how the products. That's how the markets are going to absorb these products, and we don't really foresee any issue for India to market. Yes, the price now when the price corrections have happened, the markets are also demanding more of these products. So that's why that means that, for example, if at X dollars, if the consumption was X Y percentage, whereas if it is X minus 20% or X minus 15%, the consumption is increasing from Y to 20%, Y to 15%. That is how we should see the relative impact. And when we are looking forward to increase in supply, more production coming up in the future years, forthcoming years, we should also look forward for higher consumption levels. So these markets are supporting. All these markets are actually supporting. So that way, India or Indonesia and Ecuador are doing fairly well. And China, being a net importer, is also importing significantly from India. So that is all these factors are going to aid the country as a whole.
Thank you. Next question is from Pratish Mittal from Mittal and Company. Please go ahead.
Hello, sir. Sir, I would like to understand about the damage done by this current season, by these current falling prices, about what is the situation in April and May in terms of volumes, like how much has the farm area decreased and how are the volumes currently?
Sir, the farm area has not really decreased, but the strategy of the farmers will be changing where, for example, in April and May, they have produced more of smaller sized shrimp. Now they are looking forward to produce more of medium and large sized shrimp going forward. They are changing their strategies. They are going for lower stocking densities so that they can produce more of medium and large sized shrimp so that they can have a lower cost of production compared to the past and still make it good margins. So we can't really say this as a damage. It is more of the price correction has changed the respective strategies of those primary producers located in different states of the country. And as I mentioned to my previous question, as I had responded, the price corrections are also aiding in the consumption of the product much more than what it was being consumed in the past. We will see the impact of that by the end of this calendar year as we see more shrimp volumes being absorbed from the various supplying nations. So I don't really see the damages, whatever are there, or whatever people claim to be, are more of a short term. Of course, and there is a cost rationalization happening, and also the price corrections, as I mentioned, have bottomed out, and now we look forward for an increase in pricing as the demand is also picking up.
So what will be the volumes for April and May compared to last year? Is there significant fall in the volumes produced by the farmers also?
Sir, the volumes of April and May have little bit marginally would have got affected because they have produced smaller sizes significantly. The inflow was more of in the smaller sizes. So we should actually we will not be able to look at it as on a monthly basis or on a quarterly basis. But the first crop, of course, we have had some damages also happening. That is the reason. It has nothing to do with price corrections and more to do with the crop conditions. And there were more small sizes which were produced. And naturally, the volumes have also come down a little bit. But they are getting stabilized, and we are looking forward more. Now we are actually looking forward for the second crop also. The first crop in Andhra, there were a lot of large, small sizes harvests, whereas in Orissa and Bengal and Gujarat, we are looking forward for more of medium and large size shrimp harvests.
Thank you. Before we take the next question, we'd like to inform participants that due to time constraints, we'll be able to take one last question. The last question is from the line of Nitin Awasthi from Edelweiss. Please go ahead.
Hello, sir. So just wanted to ask you about the situation in China. China was importing large sums of shrimp, but then suddenly they had restricted imports of shrimp. So what is actually happening in China as far as the imports go?
Sir, China has not restricted the imports of shrimp as a country. However, China has restricted products to Vietnam, which was the case in the last 2 to 3 years. And to tell you the truth, in fact, the Chinese authorities have reduced their tariffs, their import tariffs, just last week on several products, which includes aquaculture and fishing products and other various food products which they import, whether it is footwear, headgear, apparel. And in fact, the duty reduction was from 15.2% to 6.9%. So that is one of the major steps taken by China to encourage direct imports into their country. Thereby, this is a major aiding factor for the shrimp exports out of India and other countries, where the China's direct imports are going to increase. Thereby, we should also look forward for higher volume consumption and rather higher volume requirements directly coming out of China. Because of the reduction in duty, they wouldn't need to transit their shipments or transit their products through Vietnam or any other market.
So currently, the traffic is at 6%, and it was previously at 15%. Did I get that correct?
The tariff was 15.2%. Now they have issued a notification just last week, and starting next month. So I think this will be effective in June or July, to be more precise. The rate is being reduced to 6.9%.
Okay, sir.
Yeah.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to Mr. Subramanian Chaudhary for closing comments.
Thank you. Thank you, everyone, for your participation in our result update call. In case of any further query, you may get in touch with Stellar Investor Relations or feel free to get in touch with us at ir@apexfrozenfoods.com. Thank you very much and have a good